Many new investors start increasing rents immediately after purchasing an apartment complex, but over the years, we've adopted a slightly different strategy. Welcome to Strategy Saturday. I'm Charles Crillo, and today we're breaking down 5 ways to increase NOI in the first 90 days post-acquisition, so let's get started. You have just closed on a multifamily property. The next step is to start the value-add process. Now, typically for our new properties, we do not raise rent significantly during the first 90 to 180 days on tenant renewals, since we are usually focusing on correcting deferred maintenance and upgrading common areas. For unit renovations, what we're doing is we're renovating the vacant units and the new units as they turn over, and we want to keep the rest of the tenants at the property to stabilize the cash flow while making these initial changes. We don't want to go from something that's 88% occupied all the way down to 60% occupancy. We want to maintain it at some level up there in the high 80s or low 90s while we are doing the renovations. So since we are not jacking up rents on current tenants, what are some ways we can still increase the NOI? Number one is submeter utilities. Utilities are a huge cost, and if the property you're buying does not have submetering for water usage, I would definitely set aside these funds from the beginning to get this done as soon as possible. It will cost money and take a couple of years to fully integrate depending on the size of the property, but as tenants turn over, the new ones will cover their own water costs. Now, I would go as far as not to increase rent directly on current tenants, but have them who are renewing take over their water costs and keep the rent the same. I would not raise rent and have them take over water costs at the same time, though. Really, it's one or the other. And the easiest way to do this is when units turn. Now, you can also utilize RUBS, ratio utility billing system, is just another rent increase that will never fully cover the cost of water usage. And one more thing you need to monitor, and it's easier to have the submetered and have a third party handle all the billing. They usually charge the tenants like a few bucks a month for doing the billing, and they'll take care of everything. It's one thing you never have to really touch ever again. Number 2 is review your vendor contracts. Now, typically a new owner will bring in new property management, but you still need to choose your vendors. And this could include landscaping, janitorial services, trash removal, etc. The more units and properties you own, the more leverage you will have in your vendor negotiations. And you probably checked many sources for your new insurance policy before getting it. This is one more thing that you need to check at the annual renewal for any of these contracts. Number 3 is reduce tenant turnover times and costs. So focus on how you can minimize the time and cost between tenants' move-out dates and the new tenants' move-in time. And this strategy is an ongoing process that all property managers struggle with and seek to improve, as lost days of rent add up quickly. Moreover, we want to tighten up our tenant screening. Usually the benefits of this will not be apparent for many months, maybe a year later, but it is smart to start the process now. And if you want more information on this, you can check out episode SS203 to learn more about some effective tenant screening tips. Number 4 is review the rent roll and improve collections. So simply review the rent roll, confirm that the tenants are in the units are the same people that are in the rent roll and on the leases, and update their contact and work information. Maybe ask them if they're going to be renewing, get some more information, have a conversation with them, introduce yourself, and let them know what's happening at the property. Next, you want to start enforcing against tenants who are behind on rent and tenants who are slightly behind on rent. So speak to them, set up a catch-up schedule, and tenants with significant back rent might warrant the start of an eviction right away. It is very rare that a tenant who is, say, 2 or more months behind on rent will ever get caught up. Maybe even 1 month behind is difficult to catch up in. So this is another reason we do not want to dramatically increase rents on current tenants who are coming up on renewal. Between the vacant units and the non-paying tenants, you already have a number of units that are not generating cash flow. Number 5 is efficient upgrades. So start looking at what you can change to increase efficiency. How can you streamline the application process or lease inquiries? How can you automate rent collection and implement an online portal that makes resident servicing easier? Maybe you can do something with marketing and you continually keep marketing running, not starting and stopping it. And what type of, say, energy efficient upgrades can you make? Upgrade all common lighting to LED, add photo sensors to automatically turn lights on and off. And these upgrades, like water submetering, cost money up front, but they'll pay dividends for decades to come, and we don't have to raise the rent on anyone. By utilizing some of these NOI increasing strategies, landlords and property managers can start boosting their bottom line in the first 90 days without having to dramatically raise rents on their current tenants. So I hope you enjoyed. Please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. If you're interested in actively investing in real estate, please check out our courses and mentoring programs at syndicationsuperstars.com. That is syndicationsuperstars.com. Look forward to 2 more episodes next week. See you then. Have you always wanted to invest in real estate, but didn't have the time, didn't know where to find the deals, couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.